Look at AMC. Look at this monstrous bounce we are seeing towards the end of the day today. We are going to see a lot of volume head back into the stock and in the overall markets. The last half an hour of trading is very pivotal. Now, we only have about 10 minutes left of trading, so we're going to pretty much cover this stock until the end of close here in this video. But there is a lot to go over. The main key point, the biggest thing that everybody learned today is that the hedge funds will stop at nothing to crush the ape spirit, and we, on the other hand of that, will do everything in our powers to hold our spirits very, very high. We are not selling out. We see this reflected in the price action. We were down 16% at the lowest moment. There was a ton of volume, a lot of shorting activity that was going on. Now we are only down 8%. That is an 8% recovery from the bottom, and by the end of this video, we could recover even more than that. Well, at the same time, the S&P has been falling since AMC has started to bounce. So all of this incredibly bullish information, we are going to talk about why the hedge funds are just going balls to the walls shorting AMC, how they are putting themselves in a very vulnerable position for when AMC does inevitably bounce. As well as that, we're going to go over the end of the day wrap up, all of the information that you guys need to know, including what is going on, what are the fear catalysts, when are these fear catalysts going to be going away. So you guys will get a ton of value out of this video. If you do, hit that like button for me, consider subscribing to the channel, as well as check out the pinned comment for the buy and sell alerts. We have been doing phenomenally well over there with all of this volatility. It really only means you have more opportunities. As well as that, there is the link for the Twitter, my Twitter, if you guys want to go follow me over there. I do love and appreciate every single one of you guys. Now let's get into this video. So obviously AMC is going through a bounce right now, like we just said, but feast your eyes on the overall markets, down incredibly bad today. It is just mind-blowing. I definitely didn't see a 2.64% drop on the NASDAQ coming. The Dow Jones down still a little bit over 0.5%, and the S&P down about 1.5%, whereas the Russell 2000 down 2.3%. So the Russell 2000 and the NASDAQ, probably where we hold a lot of our stocks. AMC is a part of, this side of the market, not with the S&P or the Dow. If you're a Dow investor, you're not doing as bad today. If you're like me with the NASDAQ, a lot of Russell 2000 stocks and S&P 500 companies, you are getting beaten down. And it's short sellers that are shorting the market into the ground. Now, there is a lot of fear catalysts that we do have for the next 2 weeks. And like I said in the last video, a lot of the fear will be gone out of the marketplace, in my personal opinion, by that December 17th expiration date. I do think after Fed Jerome Powell's meeting on the 14th and the 15th, you'll see a lot of bullish reaction that Thursday and Friday following after that. And we do have a lot of option activity for AMC, as we do know, expiring December 17th. And then ultimately the big date, which is January 21st, 2022. And by then, we won't have any fear catalyst left unless Omicron turns into a very bad situation, which I don't think is the case, because the United States cases overall, besides a couple states like my state of Michigan, we're at record high cases, but overall for the country, the cases are very low relative to where they have been. So as long as that situation does not develop, we will be free and clear to start rallying by the second half of December. And congratulations to you guys if you have chosen on your own part to hold on to your AMC position. I do think we are setting up for a major bounce. But like I said, let's get into the fear catalyst. So the main thing that everybody is focusing on is Fed Jerome Powell's meeting December 14th through the 15th. Now, he is widely expected, since his comments that he made a couple of days ago about starting to taper faster. A lot of investors are trying to price this in, what this means for interest rates and what this means for quantitative easing. That means money being printed into the economy. A lot of the stock market has been propped up by funny money. So if this funny money is going away a lot faster, what does that mean for valuations of companies? Now, I think it's very easy to say that these companies have been vastly oversold. Like PayPal, I just made a very long trade on that one, about $600, $300 call for January 2023. That thing should print massive tendies. Some stocks like PayPal, a lot of these other companies, AMC, they're all severely oversold. They are ready for a bounce once the fear catalysts are out of the way. Now, let me bring your guys' attention to this article, and this pretty much sums it all up right here. So, weak jobs numbers not expected to deter the Fed from speeding up its exit from easy policy. And this is key because we got the job numbers today. We were expecting about 550,000 new jobs to be added in November. We only got 210,000 jobs that were added. So, a lot of investors heading into this figured if we got a low job rating, or job numbers, I should say, like we seen today, missing expectations by about 50%, then Fed Jerome Powell coming December 14th and 15th would be less inclined to speed up that tapering. Now you're getting headlines like this, that the Fed is still expected to start tapering, even though we're having way less jobs created than we were expecting. So a lot of people are questioning, is this too fast to basically get rid of all this funny money, since the job creation is not in line with what people's estimates are. So there is a lot of uncertainty around this. We will get clarity the 14th and the 15th. So once that happens, you tend to always see fear dissipate after a major fear catalyst. But like I said, there is other things to be made aware about, like the fact that Omicron is still here. There's a lot that we don't know, so that could be another surprise fear catalyst as well. But also, we do have the debt ceiling, and Biden just signed the bill to prevent the government shutting down. Government shutdowns really don't matter for the stock market. The debt ceiling, that is what matters. And in between December 21st and January 28th, anytime in between there, we could default on our debts. But is that going to happen? No, that is not going to happen. Nobody, Democrats, Republicans, are calling for basically what they did last time, to extend this out as long as possible. So I do think even possibly by this weekend or by next week, we will get a resolution to this debt ceiling situation. And that will be one of the bigger fear catalysts that we need to get out of the way. And then after that, all three of those things, once we get Omicron news, it's not as bad as people think. Once this debt ceiling situation is averted, and after Fed Jerome Powell's meeting on the 15th, he will be speaking. That is Wednesday, 2 Wednesdays from now. Then you will get that fear that does subside. But it's not to say we're not going to see a big bounce before then or another big sell-off before then. We're going to see a lot of these weird volatile days. You're going to go up a lot, you're going to go down a lot. It's just moving back and forth. It's like a wave that really won't be stopped until we get these catalysts out of the way. So that is really what you guys need to know. That was a mouthful, but I don't want to make this video 25 minutes long, so we had to get through it pretty fast. Now, as far as AMC, what the actual data is today, let's go ahead and refresh this page. And you're seeing a ton of shorting activity, 17.56% short interest of free float, 90 million shares that are sold short. These are only estimates. The estimates are now larger than the exchange reported short interest data that we did get November 15th, but the stock is sold off over $20 since where we were at November 15th. So I do think, common sense here, the short interest is well over 20%, and I don't think apes are selling out of their shares. Now, the share utilization is 76.66%. That is a given since we have had a lot of shorting activity. Now, let's get into the Stock Tracker data. Like I said in the other video, you have a lot of puts that have ran into the money. So you have a lot of shorting by the market makers to hedge these puts. Now you have a lot of calls that have ran out of the money. So it's the same thing going on right there. You're seeing a lot of shorting on both sides of that. But once the calls run into the money and the puts run out of the money, both of those two things lead to buying power on the open market from the market makers. So I do think December 17th through January 21st, 2022, you're going to have a lot of buying that has to be done from the market makers. Like I said, from the puts running into the money, out of the money, and the calls running from out of the money into the money, done in this, month range right here. So I do think, expect a lot of volatility, but I do expect we are going to see a major bounce back to that mid $40, $50, $60 level. And let me remind you guys, Volkswagen short squeezed at the bottom of the market in October, I believe October 28th of 2008. That was the very bottom of the market. So just something interesting to know. It's not all doom and gloom when you're talking about the Moass happening as fast as possible. Now, As far as AMC, where we are currently at right now, we only have about 5 minutes left of trading. Let's go ahead and refresh this page, and we are still seeing that major bounce. So an incredible bounce that we are seeing right now, and we are above this support level that I have drawn out at about $26.50 per share. I want to see that move in after hours above $29 per share, and then ultimately next week, I think next week, the start of the week, will be bullish. I hope we get some bullish news over the weekend that does support that, and then I do expect that move above the 200-day moving average, as well as that volume is incredibly low, only 62 million for a 16% drop. Now we're recovered about 10% of that drop already. To see 62 million in volume, which is a fraction of what we used to see, 4 times less volume than we just seen back here with what was this big volume day right back here? This was August 24th, 225 million for volume, so 4 times less volume, but a much bigger percentage round move change. So I think this suggests to you guys, people are not dumping out of their shares. It was a lot of shorting that was happening, and now we are coming in to buy the dip. So shorts are screwing themselves. They are trying to basically crush your guys' spirits, and I think we've shown our resiliency, and ultimately hedge funds are digging their own graves. So hit that like button for me, consider subscribing to the channel, and as always, check out the links in the description and the links in the pinned comment for my Twitter page if you guys want to go follow me over there, and the link for the buy and sell alert. So that's going to be all for this video. Love and appreciate you guys. Thank you for watching. I will see you in the next one.